Hang on to your hats, kids. 2026 is here, and it's time for my annual housing market predictions. I'm real estate broker Scott Curcio from Baird Real Estate, and here we go. Now, I preface this saying last year, in the last couple of years, my predictions have been much more national based. We're kicking that to the curb this year. There's going to be some stuff that's national based, things like interest rate and affordability, but we have a very big discrepancy between what the market here in the Chicago area is doing and some of the other more coastal markets. They're buyers markets, we are not. And so we're not going to talk about national numbers as much with regards to that. We're going to dive into what's going on in Chicago. So let's talk about home prices and home sales. Over the last decade, we've seen average growth anywhere from 3 to 8%, depending on the different type of category, right? Condos, single families, 2 to 4 units. If we had a really strong year in 2025, I think we're going to have another strong year in 2026 because our supply of inventory is still pretty low. In fact, in most cases, it's lower at the end of this year than, the end of 2025, I should specify, versus where it was at the start of 2025. We still have an inventory problem. We still have a lot of people that want to buy houses or make move-ups here in our area. So I think we're still going to see strong growth in terms of appreciation. And I would venture we're going to be somewhere, condos and townhomes probably between 3 and 4%, single family homes somewhere between maybe 5 and 7%. And our multifamilies, I think that one's going to come down a little bit and we may only see 5 to 6% growth for 2026. Now, of course, we have to talk about the most popular word, or at least the one that I keep hearing everywhere, housing affordability, right? When we looked at last year, we had a concern for 2025 about tariffs and the economic turbulence, and that pretty much came true. Not as much here in terms of, sales being disrupted here in Chicago and the Chicago area, but affordability is a hot button topic. We are going to hear a lot about it. We heard at the end of 2025, the administration's plan for a 50-year mortgage. By the way, if you haven't watched my video about that, go ahead and watch it. Don't do that. I think it's horse crap. I think it benefits nobody but the banks. It does not benefit you as a consumer. That is all I'll say at the moment on it. There's one other point to affordability that happened this fall of 2025, which was the federal government changing the minimum credit score requirement. Now on paper, that sounds great, right? Oh my gosh, lower credit score. But keep in mind, the program you qualify for and the interest rate you qualify for is based on your financial profile. So if you've got a credit score that's lower than 620, you're likely going to pay more for your loan than somebody else that has a higher credit score, right? It's going to come down to your debts, your income, your assets, etc. But that, as an announcement, sounds really good on paper, but if you dive into it a little bit better, I think it just makes it's gonna come out in the wash, and it's still gonna make things more expensive for people that have lower credit scores and are higher risk borrowers. But when we talk about affordability, we have to also talk about interest rates. Sidebar: some things the administration is trying to do is trying to solve stuff that can't be solved through legislation. And that is, we have not built enough homes for the last nearly almost 20 years. You can't legislate your way out of that one, kiddos. So until we have some real strong movement to build more houses to meet our needs, I don't think housing affordability is going to get any better. In fact, I think it might get worse next year. The only thing that might help it are, next topic, interest rates. Now we're going to go national for a second. We're ending the year in about the mid sixes, depending on the loan product you're getting, might be having a little bit less, a little bit more. And there's a lot that we had 2 Fed rate cuts at the end of 2025. Also, I'm recording this video right before Thanksgiving. We have one more Fed meeting to go. So by the time this comes to your inbox or your social media channel, wherever you're watching it, there might have been a 3rd rate cut. Either way, inflation's been creeping up, and there's a lot of pressure for interest rates to come down further in 2026. A lot of experts are predicting that we will, by the end of next year, end of 2026, see rates below 6. And if you watched my predictions last year, we know that that 5 number, even if it's 5.99, has a very big emotional impact. We may see a lot more inventory open up, which could be good for buyers here because all of a sudden there might be more people selling homes. But that's going to be one that we're going to be watching all year. So stay with me, follow me on my social media channels. We're going to be talking a lot about housing affordability and the interest rates. But my prediction is, if anything, I think we might get a little bit of reprieve towards the end of the year in terms of the rates. But if the prices have gone up, it might balance itself out. Remember, the average buying age right now is 40. Years ago, it used to be 33. People are waiting longer. It's costing more for them to make those moves. Now, Zillow's predicting that U.S. home prices, again, I'm going to bounce back nationally for a second, are going to go up 1.5% over the next 12 months. For Chicago, they predicted a growth of 1.2%. That's way out of line with where we've been the last year or two. So I'm going to disagree with that and go back to what I previously said about where I think our growth will come from. Big questions that are going to be, I think, crucial to housing's performance and potentially success is, do we slide into recession? There's been a lot of talk that we are in what people have called a shadow recession, that there's an AI bubble that may burst. I happen to be in that camp. I think there's been a lot of investment in AI, and the profit is not coming yet. And we're seeing a lot of layoffs, not so much here in Chicago area, but in other bigger markets. And when we're seeing these layoffs, they're big. They're 3,000, 5,000, 10,000 people. They're not small change. At some point, if people are losing jobs and they're not finding new ones, are we going to see people putting more homes on the market, right? Will certain markets that weren't quite yet buyer's markets become buyer's market? That's a real big question for the entirety of the Midwest, specifically Chicago. And my prediction is eventually we're going to get there, because we're going to be in line with what's happening in a lot of the other markets around the nation. I don't think we're a buyer's market by the end of 2026. I do think when we hit to 2027, we might start to see that. A lot of this is going to depend on what continues to happen with the economy, with legislation as we move through the end of the year. So as of right now, Chicago is sitting very healthily as a more favorable market for sellers. I think we'll probably see that adjust a little bit, but I don't think in the next 12 months we will be to a full buyer's market. The last topic I want to hit in this year's predictions video, and this might not be as much as a prediction as it is something to watch: issues with condos and townhomes. Now, some of the requirements are supposed to loosen a little bit in 2026, but if you've been watching me this year, you know we've talked a lot about it. I'm going to be talking a lot more about this in 2026. It is more difficult to get financing on a condo today, not because of the condo market per se, but because of the rules set forth by Fannie Mae and Freddie Mac. And what do I mean with that? If your building, or any building, is undertaking any large structural related projects, congratulations, you're going to probably end up on the non-warrantable list, which means cash buyer only, or you find a lender that can do a specialized program specific to your building. It's a very, that word is very polarizing in the real estate industry. I don't want you to be afraid of it. We're going to talk a lot more about it in 2026, so make sure you follow along. But those condo approval issues, which seem to have been ramping up in the back half of 2025, are going to continue, I think, into 2026. And smart sellers will get ahead of it, trying to make sure that anything is settled before they go to market. And smart buyers will look for the opportunities there and not be afraid of those things as we move through the rest of the year. So that is my recap and my prediction for 2026. Of course, a year from now, we'll revisit this and we'll see how I did. But in the interim, if you're watching this and you need some real estate advice, you know how to find me. Message below, send me a text, and I hope you have a wonderful and productive 2026.